Hey guys, and welcome back to the ASX Investor channel. Today we'll be talking about all things uranium. This past period has been absolutely phenomenal, seeing the uplift for the uranium story. There's been a lot of discussion about nuclear energy and how it can fill that stopgap as we transition towards a broader, more decarbonised society. We know there's been a significant focus towards clean energy at the regulatory and governmental level, and we know that the climate change agenda continues to grow louder and louder and louder. In today's video, we're going to be discussing all things uranium. We'll talk about the supply and demand drivers. We'll talk about why the share prices for many of the leading uranium companies around the world are up by over 100% over this past month alone. We'll talk about Sprott and what its physical uranium trust means. And of course, we'll talk about what the future might look like for the broader sector. This is a video that many of you have been requesting. There's been a lot of discussions around uranium over this past period, so hopefully you enjoy it. If you do like the video, don't forget to give it a thumbs up. You know the deal. If you're new around here, welcome. We make daily videos each and every day. So if you haven't yet, make sure you've subscribed and turn your bell notifications on so you won't miss any of our daily episodes. So I guess before exploring the supply and demand drivers and thinking about the state of play for the nuclear energy sector at the moment, it makes sense for us to take a step back and think about why uranium? Why is it entering the discussion? Firstly, we know at this higher level that there's a big focus towards this transition towards clean energy and decarbonisation around the world. We know there's this focus getting towards net zero towards 2050, and there's a lot of achievements and focus about bringing these targets closer and closer. The climate change and environmental focus is continuing to grow, and uranium is seen as a possible solution to help with this transition. Nuclear energy is actually a very clean source of energy generation. Yes, there is some negative sentiment surrounding nuclear, which we'll discuss later on in the video, but at its core, it's extremely efficient when compared to many of the renewables and other energy sources. Nuclear reactors in their current form can actually stack as well, and it's very scalable. With some other sources of energy, such as, say, hydro, you have to build a whole new dam. You can stack nuclear reactors on top of each other, and nuclear energy is also baseload. So if you think about the current baseload energy sources, such as coal or gas, of course, these have significant carbon emissions, and this is what we're trying to move away from as a broader society. However, many of the other newer energy sources, the more renewable energy sources, can't be used as baseload because of the peaks and troughs in the generation. However, nuclear itself is very efficient, and it can be utilized as baseload. You can see on the right that around 10% of global electricity generation is actually produced from nuclear, and around 20% of that generation in America is actually coming from nuclear as well. Interestingly, it's the second largest source of global clean energy with almost zero carbon emissions. It does have a negative sentiment around it, but the use case and the fundamentals driving it are pretty compelling, so it'll be fascinating to see where we head. We'd love to know your thoughts, so drop in a comment below what you think about uranium, what you've thought about this rapid uplift over this past period, and then let us know where you think this uranium push will head from here moving forward. So with that contextual understanding about the current setting, it makes sense for us to think about what is the perception towards nuclear and uranium at the moment. We do know that there has been negative sentiment surrounding nuclear energy, particularly after some of the significant accidents. We are all familiar with Chernobyl and of course Fukushima as well, is one that really stays in our memory over recent times. However, we do know that global electricity demand is increasing rapidly and it continues to pick up pace. As electricity demand picks up pace, and as well as we have this more significant focus to have lower carbon emissions with this generation, solutions like nuclear energy are becoming more and more prominent. There is also this focus on decarbonisation with nations like US, Japan and China refocusing on nuclear. China has been investing heavily into nuclear energy. Japan, with one of the new leading candidates to take over as Prime Minister, has also discussed that they may be ramping up their nuclear as well. And then in the United States, we know that Joe Biden and his administration are really focusing on this transition towards a decarbonised society, and they view nuclear as a solution. And then interestingly, underlying all of this and what's really helped to catalyse this short-term interest in the space has been Sprott, an investment fund, has currently been buying up uranium with their new SPUT, the Sprott Physical Uranium Trust. We have to think about the current state of the market. At the moment, with uranium, the price where it is, below the $50 to $60 per pound mark, a lot of these companies are actually buying uranium on the spot market instead of producing their own. Over the past period, after Fukushima, after the GFC, we saw the lows come into the price, which we'll talk about when we do look at the graph. And as a result of these, many of the companies have put their mines into care and maintenance or have mothballed mines. So there's not a lot of production coming online. So as a result of that, there's low supply. And as we see nuclear continue to grow in importance as this clean energy generating fuel, if supply stays low as it currently is and there's not a lot of production coming online, but demand continues to increase, then of course consequently prices are likely to rise upwards as we're starting to see. And you can see here on the right, electricity production by source. Of course, coal and gas are the two preeminent electricity producing fuels at the moment. However, as we can see, both of these are declining, and this will continue to decline at a more rapid rate as decarbonisation becomes more and more into focus. And so other more renewable and more sustainable clean energy fuels are necessary, and nuclear is one of those that's likely to fill that gap. And so just having a look at the graph of the uranium spot price, we can see here the story over the past couple of decades for uranium. After the USSR was dissolved and many of the nuclear warheads were recycled, there was a significant amount of uranium that came on to supply the market. So these stockpiles were distributed out into supply of uranium once they were recycled and broken down. So this led to a significant amount of supply for a long period of time before in the mid-2000s, as the focus on renewable energy and climate change, like we're seeing now, started to pick up pace. There was a lot of interest, and eventually the market reached a euphoric stage with uranium reaching above $130 per pound price. You can see here it was an almost parabolic move upwards. But then the GFC came, as well as Fukushima in the coming years after that. And since then, uranium has entered into a true bear market. We can see that's been wedging downwards on the chart here until the lows in 2016. Interestingly, actually, the lows in 2016 were around that $20 mark. And we've seen that over the past 5 years, it's been in a bull cycle. The uranium spot price has almost doubled. It's now above the $40 mark, but rapidly over this past period since Sprott has started buying up uranium on the market, as well as the renewed interest in the uranium sector, we've seen the spot price for uranium rise from $30 per pound up above the $40 mark. It is worth noting as well that, as we talked about, many of the projects have either been mothballed or they're in the care and maintenance phase and they're waiting to be restarted. But many of the uranium companies don't think it will be worthy, or they won't think they'll be reaching break even until around the $50 or $60 per pound mark. So there's still a significant amount of uplift, but as that supply starts to come online as well, it's going to be more and more interesting for the market. And so what's been the reaction from uranium stocks around the world over this past period? Of course, as we stated, the price of uranium over this past month has risen from $30 to $40 plus on the spot market. Share prices across the boards have started soaring. Companies like Paladin Energy, ASX PDN, or Cameco on the New York Stock Exchange CCJ have flown. Many of the ASX uranium stocks are up by over 100% over this past month. The question is, have the share prices been getting ahead of the fundamentals and the underlying commodity price? Potentially. As mentioned, the commodity price has risen by around 30% on the spot market, but many of the ASX uranium growth stocks are up by over 100% over this past period. They are pricing in the spot price at $50 or $60, as there's been a lot of investment, excitement and exuberance starting to get into the share price. However, it is worth noting as well that there is the potential for a retail squeeze, but I do think at the moment that it's worth focusing on the fundamentals and not thinking about sentiment and how that could drive the prices in the short to medium term. And the most important part underpinning all of this, as you can see at the bottom, is that rising underlying commodity prices drive the economics of projects. As we touched on earlier, many of these projects, the break even is around that $50 to $60 per pound mark. And so we're still significantly far away from that. What that does mean is there's not a lot of production coming online. There's not much supply coming online. And if investment funds like Sprott continue to buy up physical uranium, as well as, of course, a lot of these companies are buying uranium on the spot price to fulfill their contracts at the moment, then eventually the market is going to hollow out. As the supply side thins out, then of course understanding the basic economics, as the supply side thins out, if demand stays the same or increases, then of course prices will consequently eventually have to rise. And so then the big question is, where to from here? I think the most important factor is it's not a get-rich-quick scheme. I think many people have seen some of the speculative behavior. They're getting very excited, seeing some of the big green numbers that have been coming out of the share price uplift over this past period. I think it will go forever. We know that the share markets don't move up in a straight linear line, and that eventually there will be pullbacks. And if there's been significant velocity to the upside, then of course there's often significant velocity to the downside as well. However, I do think the fundamentals are looking interesting, and it does look like there is the potential for a multi-year bull market to be starting. And we've already seen that over the past few years. It's likely to grind higher, but of course, like any bull market, there's going to be peaks and troughs, and with such a significant amount of sentiment driving this in the short term, it's likely to be inherently volatile as a result of that. The trajectory is right, but in the short term, it has looked like a parabolic move upwards. As mentioned, the underlying commodity price was up by around 30% from that $30 to $40 mark, but many of the share prices are up by 100% plus, so it's worth just tempering expectations and that understanding in the short term with that knowledge. As we discussed, the supply side will continue to thin out. There's a lot of supply being purchased on the market to help to fulfill the contracts. With not much production coming online yet, it's going to be very, very fascinating to see how the supply-demand imbalance plays out and what that means for the underlying commodity price. And I do think it is worth noting that with so much excitement and exuberance and hype in the sector, it does have the potential to be prone to sentiment-driven moves. And we know this could mean volatility to the north side as well as to the south side. So it is worth being aware of that. I think the most important factor is to focus on the fundamentals and not the sentiment here. You don't want to be be caught just diving in on emotion, but you want to be doing an analysis and really thinking about the broader sector, the trends, and the opportunities that you might see there. If you did enjoy the video, don't forget to give it a thumbs up. Feel free to share it out as well. We're the ASX Investor channel and we make daily videos talking about the stock market, investing, and we find and analyze the best growth stocks. So if you haven't yet, hit that subscribe button. Make sure you've got your bell notifications turned on as well so you won't miss any of our daily episodes. You'll be updated every time we drop a new video as well. This past period, we've interviewed a range of different CEOs on the channel, so we'll leave links to those up above that you can check out after this one. A reminder that I'm not a financial advisor. Nothing we cover on the channel is financial advice. The stocks we discussed are not buy recommendations. These videos are all just here as a general discussion to be that starting spot for you to do your own research from. It's been a rapid uplift over this past period for uranium. It'll be fascinating to see where we head from here. Thank you so much for joining us. For now, stay well and happy investing.